Morning, Alejandro. How you doing?
Good. How are you, Fletcher?
Good. we're we're back after some technical difficulties, but excited to do this one on real estate. How are you doing, man?
Good. Busy. Ending the year strong.
Same thing. Same thing. I mean, it's been busy. I haven't seen you in a while, so I assume you've been busy. Editor-in-chief at Destino Magazine. The whole point about this was I was at a conference last week for Resi Club. It's all U.S. Real estate, like CEO types. It was actually pretty interesting. So I wanted to get a little data on the Baja market and then also get into the US market. So
Okay.
let's get rolling. All right. So the 2025 Cabo market, Baja, sir. Right. So we're going to go condos, homes, and land. Dollar volume of sold listings this year. We have about a month left in the year. So where do you think we're at?
Year to date, people say it's been a slow year, but they're not like super complaining very strongly. So I'd say like just a little bit under last year, like 10%.
I think that's probably pretty accurate. I would have almost assumed the same. So here's just quick. Last year we had almost 1.3 billion sold on the MLS. This year it's 1.4. So we're up a little over 12%. You know, there are a lot of people saying that it's slow. I've seen the high end really, really strong. You know, like I think Chileno Bay, for example, has had the best year they've had in quite a while. So I think it's definitely skewed by that. But I don't know. What are your thoughts? What's
Really then. There's a lot of very high end inventory coming online, no? Like the St. Regis residences, Park Hyatt. I mean, they're sold mostly, but still, I mean, any sale from those places pushes the numbers up because they're very big
okay.
sales.
I just saw a house in St. Regis paying last week for over 15.
And do you think it has to do with the stock market being like super high?
I do to a certain extent. That's actually a slide we have later on.
Okay.
So it's interesting. So it's higher, but it's been a battle for a certain segment of the market for sure.
Like the mid segment, right?
Yeah.
Like 500K to one.
We had our sales meeting last week and it was basically kind of 3 million and up. There's just so many things happening that it gives people a good reason not to buy right now. And that could be economic, you know, that could be psychological. But when you get, especially like that Tazal market, it gets a little bit more complex, you know. It's kind of been like that for almost 2 years now. And each time you're like, oh, it's about to change, you know. And we're adding inventory. So it's definitely a buyer's market in most areas. Okay, so number of sold listings.
Mm-hmm.
Do you think we have more sold? Like this is just homes, condos, and land. The number compared to last year.
Well, based on what you just said, I think it has to be fewer listings sold, but at a higher price.
So it's almost the same. And like you'll see a bunch of like, you know, cheaper land options, almost like La Paz. So once again, this is spread throughout like, you know, $50,000 piece of land all the way up to a lot of the Chileno stuff's not getting recorded on the MLS, but a lot of the higher end properties, you know. I said earlier in the year, I said I thought it was going to be a better year, but I mean, this is what I do. So I think I was taking an optimistic take. But it is, with everything said and done, I think if you went to markets like Florida or Austin, Texas, my little sister just bought a home in Austin, Texas, and it was probably 20% what it sold for in 2023. You're not seeing that here. And I think a lot of that has to do with leverage. So it's interesting because here we are. The weather is phenomenal right now. You know, we're in peak season. The whales are back. People are coming in. You've got the road construction going on in San Jose. So I feel like a lot more people are hanging out in Cabo, which means the traffic in Cabo is getting more. So we have, we have issues going on, but overall we are entering peak season. A lot of the markets in the US are hard right now. You know, I speak to a lot of people in the US in real estate, and people, for example, that are moving out of California to go get their license somewhere else. With all that being said, we are still selling more real estate than we did last year.
I didn't expect that.
Yeah, and for example, like Florida's down. We'll have that later.
Well, I'm curious to understand why. What's going on that we're selling more, than last year.
I don't think the demand has ever dropped. Like people want to be here. It's a question of whether they could. Because this is like a discretionary. It's more a vacation home, so it's not necessarily like a necessity.
But right after COVID, like in 2022, the market was booming, no? And then then a correction kind of happened. So would you say that the correction is over and right now we're like stable, back to kind of normal?
Yeah, no, because then it went up, and then it looks like this year it'll go up too. So yeah, and I think at this point, that kind of healthy increase or staying stable, or like 5% drop, 5% growth is not going to be anything that's shocking, right? So I think you're kind of in that level, and at that point you got to get micro and see what are you looking for in some of those markets, because you do have markets here that like some are down, some are up, but this was just like a bird's eye view of everything.
It's the whole MLS, right?
The whole MLS. And then you got to take into account, we've said this before, a lot of the inventory is not pinging on the MLS, high-end stuff, big market or big land. This was the conference that I went to in Manhattan. This was last week, and the guy who opened it up is Bill Pulte, who's at that conference. They announced the 50-year mortgage. They announced all this stuff. So it was pretty intimate. It was only like 300 people, but there was a lot of heavy hitters there. So it was really cool.
Right.
So just got some interesting data on that. This is pretty wild. Yeah. So, and this once again, Lance Lambert at Resi Club. In 1992, the average age for a first-time homeowner in the United States was 28. In 2025, that is 40 years old.
Yeah,
that's wild. So like if last week when I was there, they had Mandami get elected, so that was like part of it. So the reality is that younger people are having a more difficult time buying, and this is pretty telling right there. 40 is not a kid. No. 40, you have like kids that like are grown.
Yeah. Well, it's growing, right?
Yeah. Well, I mean, like you could have kids that are like almost get it,
I mean, yeah,
in their like they're double digit in age, but that's the other thing is like people are waiting longer to have kids because everything's just so expensive. So, and part of the reason I like getting all this data is people might say, oh, well, Cabo's expensive, or, and it's like, well, name me one thing right now that is cheap, right? Like just name one thing. Name me one real estate market. And you might say, okay, Austin, Texas, if your little sister bought a house, it's 20% cheaper, but so you have these like corrections going on, but this is just kind of crazy.
And what about moving in the States from New York City, which is unaffordable, to another city that is smaller and maybe in the Midwest or in the South? Is that an option? Or is just like there aren't any jobs?
There's a lot of reasons there. And then on top of it, we'll get into it. It's like, everything's based on the mortgage and the monthly payment too. And it's not like a good environment, because you factor insurance. You can't take out a mortgage without homeowner's insurance, and that is expensive. Everything is expensive. So yeah, people are doing lateral moves, but that's dictated by, education for your kids. Let's say you're single, then it's still like a job opportunity. So if you're leaving New York City to go to Omaha, it's not like you're gonna be making the same amount of money.
But I guess Omaha is much, much, much cheaper than New York.
Yeah, New York's not cheap,
right? So
yeah, the whole point is, I think that type of politics will continue. Yeah, and people can say it's right or wrong, but you're still this right here. I mean, I think it would be not intelligent to think that type of thing is not gonna, because those people are, bad.
It has consequences.
Yeah. 50-year mortgage.
Well, if you buy your first home at 40, you'll die. You probably die before you pay it off, right?
or you won't be able to afford the health care when you're like 80, so you'll have to sell it anyway to pay your health care.
It's a very long time, 50 years old.
Yeah.
50 years.
Because the fideicomiso here is you can renew it after 50 years. People are like, well, what do I do after 50 years? The average homeowner in the United States owns for between 12 and 13 years. So very rarely do people ever pay off a mortgage. They actually sell and then I'll take out a new mortgage, right?
And I guess what they're interested in is affordable monthly payments. No, not so much.
That's all it
like
is, man. It's like when you go buy a car and they're like, they'll hide it and be like, oh, it's only $500 a month, you know? But yeah, so my thoughts are it's not correcting anything about affordability, you know, and if it's open to everybody, then like maybe the same people that are buying housing as investment properties are going to use that as well. So I don't think you're correcting anything. I'm like open to seeing somebody try it, but I don't think it's anything that's going to be important. And this just shows you, I mean, look at this total interest, man, on a $500,000 home is almost 1.4 million. So you're literally paying 3 times the price of the home in interest.
Yeah.
That's wild. And now look at that, just for the 30-year, 697. That's a big increase. I used to have this battle with my dad over the 15 and 30. And he was all about the 15. And I thought the 30 left it a little more manageable, but jumping to the 50, I think that's a little wild.
It's kind of hard for me from a Mexican point of view to really understand this.
Well, it's gonna be it's kind of hard from an American point of view.
No, because the culture in the U.S. of using credit and debt and financing is much more complex and developed there than here. Here it's just like you buy a home, one home in your life, and that's it, and you inherit it to your kids. It's not, we don't see it like an asset that you can you can resell in the market or things like that. It's that you get equity on it and all of that stuff, which I think is important too. Don't get me wrong, but we just don't see it like that.
Yeah.
Generally.
Yeah.
So all of this seems interesting, but kind of alien to me.
No, and my point is I don't really think it changes anything. You know, the talking heads point back and forth, which is what we're doing, but
because you never really get to own the house per se. You own part of it and you sell it. The part that you sell, which is debt, you resell it. And it's a game of selling and reselling debt, kind of, right?
Yeah.
And buying it and
no, that's what I'm saying. It just got way more unaffordable.
I
think the U.S. is in a really tough spot because structurally you can't just, it's not like, 50-year mortgage and that's done. So here's the other thing. If you take out a mortgage, insurance costs, and we'll keep it to homes. Historically, how much faster are insurance costs rising in the U.S. than the past?
Than the past? I have no idea.
3 times.
Okay.
3 times. So, and this is what,
but why? So what's the risk? Because the risk is increasing too. If the insurance is a risk,
it's based upon the rebuild's cost. Now, where do you think people are moving right now? If they're leaving New York, where are they going?
Rochester, New York.
No, like leaving the state.
Leaving the state? I don't know.
Florida. Now, what do you think has higher insurance costs? So people are moving okay, so a lot of the states that people are moving to have bigger issues with hurricanes, fires, flooding, etc. So these states like Florida, everybody's really moving to Louisiana, but like coastal states, you've had it increase drastically. A lot of this is because the replacement cost to build a new home, to get all the materials, is gotten way more expensive. But you could go to vehicles. Auto insurance is up. Health and so like insurance is up across the board. So it's up for a lot of different reasons, but the point is I have a friend in New Orleans, he's like an engineer, good job, but not like doctor, lawyer.
Yeah.
And his homeowner insurance has gone from like $2,000 a month, $2,000 a year to like $7,500 a year. in a span of like 4 years.
Wow.
You know, you used to have like 15 providers, now you have 4. So a lot of insurance providers are pulling out, less competition. So, I mean, it's just another issue with, you know, buying the quote unquote American dream,
Mm-hmm.
you know? So it's getting bad. So subprime mortgages were essentially part of the reason that the 2008 financial crisis happened, which means you had, you know, people that didn't have the best credit were able to borrow money to buy homes, right? That has not come back since 2008. That represented a third of the market. And this is all stuff from the conference. So it has disappeared and it has not come back. So now all of those people, 1/3 of the people that had access to the mortgage market that can no longer, they are renting. And this was coming from a guy who was buying single family homes to rent out.
Yeah.
And it was interesting. He would even say, you know, like if somebody gets divorced, only one of the persons gets the credit score. So he said, oh, you know, and he was in defense of, because a lot of people are like, hey, he's renting it out and destroying home affordability. But he's like, no, and in many cases, that person can't even buy a home regardless. So like, I'm giving them an option. The whole point is a lot of people are renting now. And like the whole American dream of owning a home is gone.
But I guess it's good that the subprime mortgages are not allowed anymore, right? Because
I agree.
lending money to someone.
He wouldn't, because he would say that there was actually more greed on the Wall Street and the loan originator side. So like these guys that were writing the loans were incentivized to write as many as they could, and then they just pass it on to somebody else. And he's saying that, okay, to go from a 740 to a 640 credit score means you have to miss 2 monthly payments. Guess how long it would take you to build that back up? 2 months to lose it? It would take you 5 years to get that back up. So he said that during the pandemic, he was renting to this person. They didn't have to pay rent because of, you know, the moratorium. And he said 94% of his people were paying rent during that time, which was higher than the average. So he's saying like these people should have access.
Yeah.
So like that's just playing devil's advocate on that one. Only 25% of households qualify for mortgage today.
So there has to be some kind of program or system, right? So other people can afford them. Maybe maybe not subprime.
And then they're like, hey, building, but you know, there's a whole flux of issues on that too. The whole point is like it doesn't look good, especially for the younger generation. And I'm sitting right in the middle, you know, of the boomers and kids getting out of college, you know? So I see both sides.
Especially for the less privileged people, because if you're young and you come from a wealthy family.
Like you said, Mexicans will pass down to homes. So of course there's wealth getting passed down to, and that's happening on a daily basis right now.
Yeah.
But yeah, you're starting to see inequality, you know, and that's why I think you'll start seeing more of the mandami type stuff at least trickle up, whether that's good or bad, because, you know, these people are in a hard spot. So this is the stock market right now. So like we don't have real financing options down here for foreigners. You know, 10% of the people that want to do it can do it because of fees, etc. So anyway, it's just interesting. A lot of people, I've spoken to people that said they will take money out of the stock market and then they'll put it into, you know, they're literally like, hey, they feel uncomfortable, you know, like maybe 10% or 10 companies are responsible for like 50% of the earnings, you know. So it's like this, once again, it's kind of this digression where you have these really few companies that are providing all the earnings, which just means it's a much bigger risk if something bad happened, right? So I think a lot of people, you could make the argument to rotate, whether that's in the States or whether that's here, whether that's whatever, but get into a hard asset.
Gold, something like that.
Yeah, not a lot of people. I mean, a lot of people are doing crypto, Bitcoin, you know?
Yeah, and this is this is the AI boom, right? Like,
well, I think that's really like, that was kind of, you had the 2020 and it kind of like dropped a little bit.
yeah. I mean, from here to here,
Yeah. And so,
and let's see what happens, right? Because
yeah,
people are,
look at it just going out. It's, I mean, it's the stock market is high.
yeah,
And I think a lot of people think it's high.
like a bubble kind of high, right?
Some people are saying that. I think it goes up and we get into a very dangerous territory that could be close to like a 2008 scenario. That's what I think.
Wait.
And I don't think we're like far from that. Now, could I call like what it's going to be? No. But pretty cautious. No near-term catalyst to meaningful lower prices. This is the same guy who did the single family rental. Affordability will not improve without income growth.
Mm-hmm.
So, okay, you think about the bottom. Well, when their income goes up, well, the top's probably already gone up, so it's not going to be like they are going to make more money than be able to afford a home, right? Like, you got to have income growth and good luck. Income growth's been kind of like stalled. The Carolinas are seeing, so this was a term, the halfback. So a lot of people left New York for Florida, and then they realized that Florida was not the place they wanted to be. It's hot, humid, insurance costs are out of control. I mean, Florida's cool, but so now they're moving halfway back up to New York to the Carolinas. So North and South Carolina are seeing a lot of migration, and this guy's expected it to continue. So it's interesting, the halfbacks. They're calling, there's like this meme, Mandami, who's the guy who got elected. They're calling him Florida Realtor of the Year. Because you're already having like all of this, or at least people are saying all the wealth is flowing out. This is interesting. Okay, so domestic migration. So going to New York to Florida is very important to watch because it's often driven by higher income households. So this goes back to your question too. It's not the people that are struggling that have the ability to just get up and move from, let's say, Boston to Texas, right? They're much more strained. The people that have the money are like, hey, let's just get out of here and let's go here, which was interesting.
And it has to do with second homes as well, or
No, this is just more
just primary.
This is primary people that are like, hey, we're getting out.
Yeah. Okay.
So a lot of people like that went from New York to Florida. Yeah, the weather, you could say the weather, obviously, right? But a lot of that is for tax purposes.
It's a tiny proportion. There are not that many, but there's more and more people moving from the States with their families here.
Yeah,
in Cabo, like full time lately, and
I think that's
with young children and stuff.
I think that's happening in like Portugal. I think that's happening in other parts of Mexico. I think people are just the political drama, like the headspace that the average American has. It's heavy, man. I know this because like people come down here and they'll like ask me. And I'm like, man, I'm not even gonna go there because like I enjoy life and I don't really care to like squabble. You can tell how somebody asks a question to what they're after. But that's a whole nother thing, man, is like mental health associated with either not being able to afford things or just the fact that your news feed is constantly barraged with propaganda, in my opinion. This is interesting, the 3Ds. This is like a big driver of what's happening: death, divorce, and debt.
They're the main drivers. You say
No, I'm saying like this, if you took this out, you wouldn't have that many home sales.
Mm-hmm.
That's what Lance was saying in the beginning. The 3D order out. Active housing inventory in the U.S. is increasing, but remains below long-term norms. So Lenner is a home builder. So you'll say, okay, the argument that housing's unaffordable, we have to build more homes. That's a no-brainer. But they're always behind the curve, and it's not exactly that easy to build up supply. So you have these national home builders. Their margins compressed from like 27% to like 18% over the past couple years too. So they're making less money, but they were giving like 14% more in incentives this year over 2 or 3 years ago.
Incentives, what does it mean? Like
So like that could be literally like if you're buying a condo here, you're throwing in furniture, okay, what they'll do is they'll buy down the rate too. So since they're building, they'll be like, hey, they're doing a 7% rate. We'll give you like a 3% rate for 3 to 5 years, something like that. Okay. So, but it's costing them that much more to do it in order for them to sell new construction homes. And remember, a lot of the insurance cost is based on the replacement. Okay. The replacement cost of the home. You know, so they're building and their supply was building up. And this is where it gets dirty. A lot of them, they buy these lots and they just sit on them because they know, why will we build in this environment? Well, we already had inventory. Oh, well, it's a national crisis. We need more housing. Well, we have shareholders to please. You know, like that gets, it's like these guys, that's strictly a commodity. They're just building like cookie cutter homes.
Yeah.
Their margins have compressed from 30% to 17%. This was just that one company, by the way, not industry wide. They're publicly traded, so Lance pulled it from there. Foreclosure activity remains below pre-pandemic levels. You know, so I'm telling you, I think the other shoe is going to drop at some point in the next couple of years. Now, the debt and the FOMO has to increase for that to happen. But it's clear that it's not necessarily happened on like banking, you know, maybe there's private credit, right? Maybe that's like crypto, maybe that's the stock market, but there has to be some sort of top. But in the housing market, 25% of the population can really afford a mortgage right now.
Yeah.
And they're paying their bills. So the good news is that foreclosure activity is low. The bad news is that only the people that can afford it, which is not a huge part of the country, is paying their bills. 2020 to 2022, Florida was on fire. And it's been slow. And this year, what's expected across the state, 5%. Once again, you have your different segments. Can't compare Miami to like Jacksonville. With expectations for a flat 2026. Okay. Like, okay, so if that happens here in Cabo, like, is that a bad thing? No, not really. Exactly. This is interesting too, because, okay, so you have single family. A lot of these guys were investors, right? And they would say that, oh, you know, there's this rhetoric that Wall Street is gobbling up these single family homes. And here's why, because can't afford it. And of course, they're going to be biased and provide stats that show the opposite. But these are some of the stats. 90% of investor-owned homes belong to small landlords with fewer than 11 properties. I mean, honestly, that should probably be like 4 or 5. Up to 11 property is it's bigger. Yeah. So mega investors are just 2.1%. 1,000 plus homes. This highway is saying, it said it's so misunderstood. BlackRock is the one who's buying up the homes, but everybody says Blackstone, and he's like, poor Blackstone. I don't think anybody feels bad about Blackstone, but you know, that's how misunderstood it was. Investor market share surged to 33% of all home purchase in Q2 2025, the highest in at least 5 years. 1/3 of the homes that are being bought are from investors right now. And that's okay. So what if they have access to the 50-year mortgage? Is that going to help out? You know what I mean? Yeah. So that's why I'm saying it systemically. I'm not saying I know a solution. All I'm saying is that systemically, it does not look good. Basically, participation dropped 24%. So first-time home buyers are struggling. And from my standpoint in the middle, I think this is honestly the first time since World War II that the younger generation is not better than their parents. You used to be able to say like your kids are better off, and then you get in, don't even get me started on the federal debt, you know, especially in a Republican administration, you know, that is fiscally responsible and it keeps climbing, just really destroying the dollar, in my opinion, which even makes it more attractive to be in international markets like Cabo.
Yeah.
But so there's a whole slew of things that just do not look healthy. Affordability, 6-figure income now required in over half U.S. markets. 60% of households unable to afford a $300,000 home, which is, I think the average price in the U.S. is in the 400s anyway. So you're talking about, You know, I met a guy from Chicago that was buying, homes that were like 70, 80, up to, it was like 3 bedroom, 1 bath in like a suburb of Chicago for rent out. And he had over 100 of them, but that was his business model. So like there are homes, but it's just not going to be in like a metro area. I'm curious on this. I was just on a call. I'm part of this real estate mastermind group, the Hub, and we had a call for like an hour. I'm curious, what are your thoughts on like AI right now? Are you using it?
I mean, I use it a lot. I think it's what I see in the talk about AI is that we are in kind of a we're disappointed about it. Like the past 2 years we were like, this is going to change everything, and the world is going to be completely different. And now it's like, okay, it wasn't such a big deal, right?
Yeah.
Like that's kind of the feeling, the general feeling. And what I read is that what's really needed is that it's incorporated into business processes, like automatization of business processes, and that hasn't really happened. And if that doesn't happen, like on a large scale, that bubble that we saw is probably going to burst.
Nah, I would agree. I was on this call and it was like 3 people. It was an hour long. We're presenting like things that within like the real estate brokerage world. And this one lady started and she's basically talking about like inbox zero, which is like you get it down to, I think I have like 4,000 email. I'm terrible with emails. So she's like, I don't like emails are terrible, which I thought was funny opening. And then her whole thing was about how it's going to use AI to help emails and do all this. And I was sitting there and I was like, this seems like we're trying to overcomplicate things just to send an email that's not even going to work.
Yeah.
And like the AI, Gary Vee will say this, some of the most important AI is like, it's being bought up by the big tech companies anyway. So like you're already using it too. But I do say like, Larissa would say too, that like, yeah, we're using AI to help make things more efficient for sure. But I do think, and then I've seen this too, most people that are trying to sell AI services are trying to lead you with that fear, and then they're basically going to do what you could probably, they'll accelerate what you're going to learn about AI, which you would have done anyway.
2026, that's what I recently read in an article in The Economist, because they have this thing where they say like the year in 2026, and what they say about AI is basically that, like if they don't figure out, like the companies that are invested in it, if they don't figure out a way to make it a part of business processes, like at an operational level and widely adopted, I mean that's the key and that's where their efforts and that's where the new companies that are going to make money from it are focusing in making it part of daily business operations.
Yeah.
Interesting. No, and I think a lot of the stock market is kind of over leveraged. Like it's just kind of.
Yeah, because then when you read the data, it's like 95% of businesses that up to now have tried to incorporate AI in their actual operations, like business processes, like they haven't seen any returns from it. So I guess it's a technology that it's in a very early stage, right?
Yeah.
And we're super excited about it, but we still don't know like what to do with it.
Yeah. I would agree.
Right?
I would agree. By the way, I didn't show you any of these collections before, and so people understand that. So that just came out raw, which is how I wanted to hear. Cool. Well, Alejandro, that was a bit over the place, but I hadn't seen in a minute and I wanted to catch up. We have interesting talks. So
Nice.
shit.
El fin. Okay.
Anyway.
Thanks, Fletcher.
Thank you, Alejandro.